Righty. Zones, unmitigated, mitigated. I think you're probably overthinking this a little bit because it's not an exact science when it comes to whether or not we want to trade from it in the future. So, in a most ideal world, we would be trading from zones kind of like this in terms of when I say most ideal that we want to be trading from that, I mean purely in terms of it has no mitigation, right? So, this zone here that I'm just drawing on, we can see that when it was created, right, price just impulses away from it. So purely talking about mitigation, not is it well priced, blah, 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 but purely talking about is it fresh or not, is it unmitigated, this would be perfect, right? Because when it was created, when that demand stepped into the market, price has not touched into it since, therefore all of the demand, all of the orders within here should still be fresh, right? So that's ideally what we'd like to trade from all the time when we're purely when we're talking about is it mitigated or not, right? However, in some scenarios, we have slight mitigations, which we'll get into. So this zone here, right, that you were talking about in your example, as we can see, when it was created back here, right, demand closed above the previous candle's high, led to a break of structure. Therefore, at this point, it's valid demand. Price pulls back into it, has a slight mitigation, and then continues. So we can say that this zone has been mitigated, or it's had a mitigation, right? It has filled some of the orders, and that's led to a movement. Now, this kind of all happens in quite close proximity. It's kind of all just kind of part of one big leg, right? If we zoom out a little bit, we can kind of just see that it's just demand came into the market, right? Rather than price coming up, pulling back like this, tapping into it, and then going, right? If we get something like this, like a clear movement out and a clear pullback over the course of multiple candles, then we tap into it and then we go, then generally I do view that type of zone as fully mitigated, and 9.5 times out of 10, I wouldn't care, I wouldn't be interested if price came back into it, because this has had like a clear sustained move, a clear sustained pullback, and then a movement away. So generally, I can't really think of a scenario in which I would then want to trade from this zone if that happened. This is kind of the next level down, where yes, it has had a movement away, and then over the course of 2 candles, we have had a pullback and moved away. So I do classify that as a mitigation. That is a mitigated zone, but it's not as bad because like it's just kind of, we zoom out, it's kind of just one movement up, right? It's not like this would be very different if we had that and then we went. This is kind of just a little tap and go, right? It's kind of, do you know what I mean? If you zoom out, it's just one movement. So it's still mitigated, but if we come then back all the way over here, this is why then I was then at this point back in the start of September, I was still happy to consider longs from here because it's still kind of just part of this one big movement. But also the other key point I want you to take from this is it's also the area of value, right? This is right at the extreme swing low, whilst technically we were still bullish. So I'm a bit more willing to look at the zone at the very bottom or near the bottom, even if it has that slight mitigation when it was created, just because of the area of value. It's likely we're going to get a tradable reaction from here anyway. Okay. And then the other sort of zone we get directly after that, which is like this zone here, right? It's not the best zone in the world because it technically doesn't even really directly break any structure. But when it was created here, price then comes back in immediately, taps into it and goes. So again, if you're 100% mechanical, when this zone was created, when this candle closed above it, the very next candle pulls back into it and goes. So it's had a slight mitigation, okay? So this is not the best zone in the world whatsoever. And if you actually look back at our markups back around this sort of time, back in August, I actually had all of the zones drawn on like this with the sell to buy wicks all mitigated and just kept following it along. And at that time, I actually viewed this as the last mitigation if we follow like all of these little mitigations along. And I was actually treating this as, potentially the unmitigated extreme at that point because you can follow all the series of mitigations. But I'm aware that if we push down, right, the next kind of key level, there's a general area here, right? We can see that price came in and then had that push up. Yes, it's had a slight mitigation here, but whatever. Happy to look for longs from here. And then that ended up, eventually failing. Okay, well, this is the next zone. It's right at the bottom. It has had a slight mitigation. Like if you look back at all my markups then, I'm pretty sure I talk about that in the text bubbles I had. I talk about that in all the session recap videos that it's not ideal. I want a fully unmitigated zone, but at the end of the day, I can see that demand stepped into the market here, right? We can see that. And when price comes back, I don't just jump into entry straight away. I look to see, is the M15 starting to shift bullish? Okay, fine, right? Let the market to the right tell you what it wants to react from, right? We can understand that there may be orders from within here. It's not the best zone in the world. It does have a slight mitigation, but we can be aware of it and draw it out And then what I care more about is how does price react when it gets it. Let the market tell me. I don't have to second guess. I'm not just whacking a risk entry on this zone. I'm looking to see, okay, do we get those reactions? Fine, then I'll trade from it, right? So in terms of defining whether a zone is mitigated or not, we can mechanically do that. The trickier bit is whether or not you want to trade from it. So typically we will say that we only trade from unmitigated zones, and that is true, but it's generally like, it's a bit of a gray area, right? When price is coming back down here, I would still view this kind of in my mind as like, this is what I mean when I say an unmitigated zone, which I understand is a little bit tricky because we do have that slight mitigation here, but it's just a tap into the edge. It kind of happened just as it was created. It's not like we moved out and had a clear pullback and then went. And also it's just the very, very top of it, right? There's going to be, especially from a daily zone, which is like what, 70 pips or so. If we start pushing in and down here and M15 starts giving me bullish signs, I'll look for a quick trade to play a pullback from. Okay, so that's what I mean. It's not an exact science, but there we go. So let's talk about the M15 example, which was back in February somewhere. 16th or something, wasn't it? Somewhere around here. Let's have a look. So, what was that around here? Yeah. So back here, right, we have this supply, nice big supply zone, leads to that chock. It's created here. The next candle pulls back into it, mitigates it, and pushes down, right? And then we come back into the supply zone and we push down. So you understand all of that. So then when price is coming back up, I guess your question is like, why, if this is just a wick into it when it was created, can we not then view this top zone? I think this is probably where you're getting confused. Can we not view that as a zone? You can do. I guess the difference here is that this wick pulls like right up into the EQ, right? It like kind of really, really, mitigates all of the orders within there. It's like a deep mitigation. Rather than if we had just come down, tapped into it there, and then gone, then yeah, because this is at the top of the movement, it's in that area of value that I'm talking about. And if it only had a slight tap into it, then yeah, then I'd be a bit more willing to look at that. But I would still be kind of be a bit wary there is a supply chain here. And this would be the true unmitigated extreme that would care most about. But if this only had a slight tap into it like that, and then did this, and then I would look at this as the unmitigated extreme. But if price pushed up a little bit higher, and again, this is like, imagine this is our swing high or something, then yeah, I'd be willing to bring this across and obviously potentially get involved. So that's what I mean. It's a little bit of a gray area. So perhaps if you're getting confused and you want something a bit more black and white, then what I would say to you is, if it's a zone that's right in an amazing area of value, like right at the top of the range, and it just has a slight tap, then yeah, be willing to trade it and maybe only view it as fully mitigated if you get like a tap into the EQ of the zone like that. But yeah, don't get too caught up on it. I think maybe you're trying to overthink this element a bit too much because it's not an exact science. And typically we just let the market react. So like if we're putting back up here, I would be aware of this zone and potentially, if this didn't have as deep as a mitigation, I'd be aware of the extreme and I'll just trade from either zone that price comes into because I'm going to let the lower time frame entry models react from. The area of value is the most important thing generally. Okay. That's the most important thing for the most, I would say compared to that. So yeah, I think maybe you're overthinking a little bit, but hopefully that gives a little bit more color to it. It's not an exact science. Kind of just don't zoom in a little bit too much and get super, super caught up on these little touches into it. Just kind of like zoom out a little bit, right? Imagine you had like a blank chart and you go, right, where are the obvious demand zones in this range? I would go straight away, bang, there, and then basically bang here, right? They're the two main areas, right? When price gets into here, when price gets into around here, I'm going to look for trades to the right. And that's kind of how my brain works. Try not to overthink it too much and find the most perfect unmitigated zone, because sometimes the most perfect ones fail and sometimes the ones with slight mitigations give you a better reaction. Okay, so it is what it is. But yeah, hopefully that helps.